Welcome now, stock trades. In this video, we're going to have, unfortunately, more bearish news, more decline, and I'm going to show you data to back up everything. All right, so embrace for impact because the bears are about to win. In the end, I'll go ahead and put my insight into the mix, and we'll be doing other due diligence to provide data on top of this one here. But without further ado, can't even speak. I'm so tired. Let's get ready to rumble here. All right, so what do we see here, okay? So overall, we see the S&P 500 index up at top here, okay? And we go ahead and we look at our percentage between 52-week lows as a percentage of highs and lows on the 10-day average, okay? We go ahead and take this data and we aggregate it between 45 and 65, okay? And what we find is every time we go above the threshold over 65, we get a sell level, okay? And what you're finding here is that we just got a sell signal, I would say yesterday, right? I got this data aggregated yesterday. So we got a sell signal here. So back in October, we got a bullish signal, and then now we're getting a sell signal. And the thing is, we haven't even started falling to a level of significance where we get a bear market reset. Now the bear market is about to continue again, okay? So we're about to go down more. So let's continue on with the analysis. So unfortunately, you can't see this, but on the top here, it says the S&P 500 after a 10-day average, the New York Stock Exchange lows as a percent highs and lows. So it's essentially takes this data that you see here, aggregates it, and looks at every time it went from 45% to 65%, and looks at it from the 1928 all the way to 2022. And unfortunately, your guys are not going to like this. So we got a signal here on August 30th. And then that's when we got that signal here. And then we started to sell off. And then October came in, and then we got the reset. And then once we got that reset, we went ahead and went back online. And then now we're getting the sell signal. And then unfortunately, what this basically tells us is that within 1 week to around 3 months, we should expect some negative returns in the market. And again, this is using statistics to essentially take the data from 1930, honestly 1928, but 1930 here all the way down to 2022. And unfortunately, we just got that signal yesterday. We just got another one December 19, or 2 days ago. So it's unfortunate. Okay, so then now let's go ahead and take a look at the buy side, right? Because just like how there's sell signals, there's also buy signals, okay? So if you look at the composite washout model here, and this is the data I get directly from a hedge fund, and I use this data to essentially help me with my swing trades as well, because there's like long-term accounts, there's short-term accounts, and there's like day trades, right? And then there's also like swing trades. And swing trades, are like more, I would say, classify them at least for me 2 to 3 days, holding overnight, So overall, as you can see here, we get this is 2020, right? Because this is 2021. So you remember March of 2020, we had the coronavirus pandemic, and that basically started to attack the stock market. Well, we got a crazy buy signal here, and then would you look at that? It was beautiful. Then we got a buy signal here, right? This was the end of going into September or something, and then we got a sell signal up here. Then in October we got a buy signal, and now we have a sell signal, right? If you don't remember, there's a sell, right? Now, unfortunately, as you can see, this is not good. Very, very not good. We're starting to see here that we have yet to go down, a lot more room to go down for that second composite buy signal based off of this aggregated data. So it's unfortunate, but I should expect, I expect personally, and this is not financial advice. This is just an educational platform to show you exactly, what other hedge funds use and what other successful traders and successful people use. And we try to democratize financial information. So we tried to essentially teach you guys how this works, but expect more pain. Expect more pain. All right. So this is a different graph. This next one now shows us the threshold level of where we're going to get a, when we're going to get that green, right? That buy signal. And unfortunately, we still have yet to go. Usually the threshold is around 44. And right now we have yet to go up. The higher you go, the more lower the stock goes. So unfortunately, we need to go down a little bit more before we get another signal here. And also, this is 2020 pandemic. We got one right there too. So see how clean this data is. Again, usually it doesn't. It's not as choppy like this, where it's like every 2 to 3 months. Usually, we have some time to breathe. This market is definitely a wild one. But overall, I hope that this was helpful. Sorry, excuse me. Giving you guys some, data here so you can ponder and see what's going on, because there's a lot of emotions in the market, right? There's a lot of emotions, and it's nice to be grounded on with data. Now, let me go ahead and let me add something here, because I find this important as well. So today at 9:52 a.m., I made a comment in my private stock group, and where we essentially break down articles, and we talk about things in Clover, and we do our analysis. But I found something of interest. So we used our proprietary a collaboration with a very prominent software engineer using AI resistance levels, and it's very beautifully done. As you can see here, I highlighted this at around 9:52 a.m. that if we break $129, the next level of support will be $94.47. And my apologies, what we're looking here is at Tesla. So whenever we get a downtrend like this, and essentially, for me, it's like, oh, when would I want to reopen a position in Tesla? Is, when am I going to get some support? Now, we got some support here. Many people got excited. I would say a good support level would be if it's still trying to go down, I would say two bumps would be a good level of support. But unfortunately, we got that kind of bear market rally there, and then now we're falling heavily. And then also some Elon Musk drama. But overall, I wouldn't be surprised if we see Tesla at $94. Isn't that crazy, right? Anything lower, I would be very, very surprised. Unfortunately, once we get below $63, then we're going to have to use another version of our AI to look at the market, to look at Tesla. But as you can see here, right now we're at $125, and Tesla's down 8% today, almost 9% today, and it went below the $129 level of support. Now this 129 is a level of resistance. So again, the market is basically frailing everywhere, and it's going down. Okay, so that's all I have for you guys. I hope that this was very enjoyable with this sounding education, and I hope to see you on the next one.